Happy fall. Even though it doesn't feel like it this week, I'm sure the leaves will be changing pretty soon. And just like seasons change, they're predictable. That's not always the same. And that's the same with the markets and the economy. So what do we have going on right now? Well, government shutdown. Not the first time, not the second time. In fact, about 21 times here now that and counting for these shutdowns. Went back and did some research. 1 day is the shortest, and 35 days is the longest. So we'll see how long this one takes. A lot of pomp and circumstance around these shutdowns, but contrary to popular belief, shutdowns don't generally cause recessions, and they typically don't lead to much market volatility either. In fact, most government shutdowns actually occur during periods of economic expansion, kind of like what we're going through still, here as well. We're not seeing the economy in bad shape currently. So if we recall that the technical definition of a recession is 2 consecutive quarters of negative GDP. We did have a slight negative at the beginning of the year, the first quarter, but at the end of the day, we've been positive or growing for the rest of the year. Even to take another step back when we talk about, what kind of an effect does a government shutdown, really have? Total GDP spending by the government on average, so this is going back a number of years, about 20%. And again, we're not going to see a full, shutdown of the government. Things, are still working. Social Security payments still will be coming out, those kinds of things. So at the end of the day, the impact from the government shutdown on the economy, will not be that large. With the caveat of, we'll see how long it goes. Obviously, there's a lot of pressure to get some of these things done. So, as usual, we have some certainty because these things have happened before, but each one is different, and we'll see, whether we see any kind of negative outcome as a result of this. My sense is no. So the other big bit of news here recently is the Fed has finally decided to cut interest rates. It's been a long time coming. It's been in the news, at least in our industry, for quite a while, and we're on the other side of it now. Markets were pretty sanguine about it because, frankly, it wasn't much of a surprise. Those things obviously do come to pass when when the market doesn't like uncertainty. So this was something that was certain. The Fed has indicated that they might have more rate cuts coming. We'll see, right? They waver between being dovish and being hawkish, and of course their mandates are reasonable inflation and low unemployment. So unless they start seeing things change in those two regards, they're gonna pretty much stay the path. It's a catch-22 for us because from an investment standpoint, we actually do like rates that are a little bit higher. We like to have those good interest payments on the investments that we have, for you. But of course, for borrowers and especially the housing market, could definitely use some relief on the interest rate front. Markets for September, S&P was another positive month, 2.8%. So like to see that, obviously heading in the right direction. Tech and communication stocks kind of led the way last month. Not much of a surprise there. Bonds actually were up again last month as well, about 1% on the aggregate. So things are trending in the right direction. Hopefully we're not climbing the wall of worry too much because, as we've said before, the stock market is certainly overvalued when you look at the fundamentals. But the market can stay overvalued longer than you can stay liquid is one of our famous sayings in our industry. So, of course, we're keeping our ear to the ground here. Investment Committee is working hard behind the scenes every day on your behalf, as am I. And of course, if you have any questions, you want to talk about your allocations in your portfolio, anything that's concerning you, that's what I'm here for. So until next month, enjoy your September or October. It's October. See, I'm living in the past. Too much pumpkin spice already. And we will talk to you soon. Thank you.